Last week, we said Newmont's Q2 earnings would set the tone for this earnings cycle, and so far, we couldn't have been more right. SSR Mining is one of the latest to report their results, and they followed directly in Newmont's footsteps, with the company posting massive year-over-year improvements in the second quarter. The results on a year-over-year basis were, of course, boosted by the addition of Newmont's Cripple Creek asset, which SSR acquired back in February. That asset provided the year-over-year growth demonstrated by SSR during the quarter, at least in terms of operations. With that being said, let's dive in. SSR Mining in the second quarter of 2025 posted top-line revenue of $406 million, which was an impressive 119% improvement over the $185 million in top-line revenue recorded in the second quarter of 2024. Analysts, meanwhile, had called for top-line revenue of $352 million. That massive jump follows the sale of 117,000 gold equivalent ounces in the second quarter at an average realized price of $33.36 an ounce. Comparatively, Q2 last year saw the sale of 72,000 gold equivalent ounces at an average price of $23.78 an ounce, which translates to a 64% improvement in ounces sold and a 40% improvement in the average realized price. Cost of sales, however, increased at a quicker pace, jumping 69% on a year-over-year basis from $97 million to $163 million. Operating income, however, improved substantially, from $11 million to $109 million, despite Copler being a drag on operations with a $59 million operating loss for the quarter and corporate operating losses quadrupling year-over-year to $35 million. Cripple Creek contributed materially here to this improvement, with the operation individually contributing $93 million in operating income. However, even with this mine removed, the line item improved materially on a year-over-year basis. The figure is significant given that SSR paid $100 million in upfront consideration for Cripple Creek, alongside $175 million in milestone-based payments. Net income overall improved from $2.5 million or 5 cents per share to $80 million or 42 cents per share on a year-over-year basis. On an adjusted basis, net income climbed from $7.5 million or 5 cents per share to $110 million or 51 cents per share. Analysts had anticipated 23 cents per share. In terms of the balance sheet, operating cash flow totaled $158 million, while free cash flow totaled out at $98 million, of which Cripple Creek contributed $85 million. SSR's cash and cash equivalent position moved to $412 million, up substantially from $317 million at the start of the quarter, and from $388 million at the start of the year. Total liquidity sits at $912 million, which includes an undrawn credit facility. Moving to the production side of things, SSR Mining in the second quarter saw total gold equivalent production of 120,000 ounces, which was an improvement from 76,000 ounces in the year-ago period. Broken out, production consisted of 91,000 ounces of gold, 2.8 million ounces of silver, 13.9 million pounds of lead, and 1.1 million pounds of zinc. On a site-by-site basis, Marigold contributed 36,000 ounces of production, a 39.8% improvement year-over-year. CB contributed 11,000 ounces, a 34% decline year-over-year. Puna contributed 26,000 ounces of gold equivalent, a 15% decline, while Cripple Creek contributed 44,000 ounces, and Copler continued to produce nothing. CB operations were down on a year-over-year basis as a result of power interruptions related to forest fires to the north of the mine. While operations have resumed, production is expected to come in at the low end of guidance as a result of the downtime. No reason was given for the decline at Puna. Copler, meanwhile, continued to be a drag on SSR Mining, with the company continuing to work towards a mine restart following a tailings collapse in the first part of 2024. A further $63 million was spent during the quarter at the mine, including $54 million in remediation costs and $9 million in reclamation costs. The revised estimate for total costs at the mine related to the event have now risen to $313 million, which is above the prior range estimate of $250 to $300 million. And despite this expense, no timeline has been provided for an operational restart of Copler, with the company seemingly uncertain whether a restart will even ultimately occur. Lastly, excluding the contribution of Cripple Creek, gold production still improved year-over-year, although very marginally, with production ex-Cripple Creek totaling at 76,129 equivalent ounces versus 76,102 equivalent ounces prior. So there's a 27-ounce difference. And in terms of costing, cash cost per gold equivalent ounce sold rose from $11.92 to $12.82 an ounce, a 7.6% increase, while AISC fell from $21.16 an ounce to $20.68 an ounce, a 2.3% improvement. Excluding the impact of Copler, AISC stood at $18.58 an ounce, which is still among the higher end of peers, but not terrible. All right, so let's wrap it up. Before we go, we should mention that SSR has indicated they remain on track to meet guidance of 410 to 480,000 ounces of gold equivalent production this year, while also reconfirming those ounces will be produced at an AISC in the range of $20.90 to $20.50 per payable ounce, the latter of which they might beat based on the current trajectory of things. Anyways, it was a strong quarter for SSR Mining, and that acquisition of Cripple Creek is currently shaping up to be one of the best decisions this management team could have made, which puts them on a bit of a corrective path of action, while at the same time bringing into question Newmont's decision to sell off those assets right as they were beginning to print cash. But that's a discussion for another video. All right, everybody, we're going to have lots of earnings videos on this channel coming up here over the next week, so buckle up. If there's stories you want us to cover, as always, please let us know in the comment section. And folks, if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.